What is Forex trading? To a beginner, this might look like graphs and numbers and charts that are way too difficult to understand. But by the end of this video, you will know exactly what Forex trading is, how to use the charts and the numbers to actually create a strategy, and how you will be able to start trading immediately once you are done with this video. If you're new to the channel, subscribe. Let's do this. So number one is currency pairs. Now imagine this scenario. You have a big guy like me with muscles, six-pack on one side. You have another skinny, weak guy on another side. They are in a ring and they have to fight each other. There are two ways you can bet on this game. You can either bet for the big guy to win or for the small guy to lose. This is the same thing with currency pairs. We pair different economies, different countries together and then bet on them depending on the strength and weakness of each currency. So that is the main purpose of currency pairs. Now that you know what currency pairs are and why they are paired together, we move on to the charts. To a beginner, this might just look like a bunch of boxes and charts. I remember even me, I used to wonder what the heck I am looking at. But we need to be able to understand exactly what we are looking for. So this chart is called a candlestick chart pattern, and these are what we call candlesticks. So you can see we have red and blue. So I don't want to get into the details because I want it to be as simple as possible. So what I want you to think of is the way there is only boys and girls. Now I know there are some people where we have all these different other genders, but in our case here, let's think of boys and girls. Even if you are short, tall, fat, skinny, it doesn't matter. So long as you're a boy, you can be classified as male. And so long as you're a girl, you can be classified as female regardless of your size. This is the same thing with candlesticks. So if we look at these blue ones, this means that price is going up regardless of the size. So you'll see we'll have big candlesticks, we will also have small candlesticks, but the color is what determines where price is headed. So the candlesticks are just a way of representing price and time and showing you whether price was going up or down. Simple. We don't have to complicate things. So you can see that when it's red, we are going down. When it's blue, we are going up. Nothing else. That is the purpose of candlesticks, to know where price is headed, up or down. Now we move on to price movement. So when we think of price movement, think of the scenario where we have the big guy and the small weak guy. Now, even though the weak guy might win, might beat the shit out of this other small guy, the small guy does not just sit there and wait to be hit. He also hits back when he can. It's the same thing with now the charts and how price moves. We have buyers and we have sellers. So if we are buying or if we have buyers in the market, they push the price up. If we have sellers in the market, they push the price down. And so you'll notice that if price is going up, we will have buyers who are strong pushing the price higher, and then they will reach a point where price will start going down. But it will not go down back to where it began because the buyers are still strong. They continue pushing higher, and then sellers come in and they continue pushing higher and higher until the buyers cannot buy anymore because there are no sellers to sell to them. Because if you are buying, you need people to sell to you. So let's look at now the price action movement. So price will always move in three ways. We will have a buying scenario where we have an uptrend, so we have strong buyers in the market. they are pushing the market. Even though the sellers push the market down a little bit, they continue going higher. And then we have a selling market or a downtrend where we have sellers who are strong. Buyers try to buy a little bit and then they are pushed down. They try to buy a little bit, they are pushed down. They try to buy a little bit, they are pushed down. So price will always move up, move down, or we will have a situation where the buyers and the sellers have the same strength. And so we will see price just staying within a range where it's a tug of war. Price reaches a certain level, it's pushed higher like that, until we see now strength in the market. So this is what we call price movement. And if you can understand price movement, then it's very easy for you to now start looking for opportunities in the market. So let's look at uptrends and downtrends in real life examples. So now this is a very good scenario here. We can see we have this uptrend where price was going up, down, continuing higher, down, continuing higher. Then we see we have another scenario here where price is just staying within a range. It's not going higher or lower. Price is just staying here. So now price now can either break out and continue going higher, or price now can break out and start continuing lower. We don't know what price will do, but this is how the markets move. We either are in an uptrend, downtrend, or in a ranging market. Now that you understand price movement, now we can move to support and resistance. So here's the thing. When price is moving, it will always be creating these lows. So let's use the example of, say for example, this uptrend here. So what we see is that price here, so let's say price started here. So we see price going up here. So price went up and then price went down. Then price went up, then went down. Then price went up, then went down. Then price went up, then went down. But notice, if we draw lines at each low, so we have this lowest point, then the next lowest point is here. And then the next lowest point is here. So support is where price comes to. So think of support like a floor. So this is a floor here. So if it's one touch, like if it's one low, it needs, so one low looks like this. So if it's one low, that is a low and it's not support, but it has potential to be support. It will only be support when price comes back to that low and then continues going higher. So now we have an area of support because now it's supporting the price at that level. Meaning there's a very high probability that in the future, if price comes back to this level again, price will be supported. And if it breaks below it, then now we know that we can continue in the direction of the breakout. So we see that up here we have support, price breaks below that support, comes to this line again, gives us another support before going in that direction. So same as here. If we look at this here, this movement here. So price moves up, moves down, gives us a low there. And then what happens? Price comes back to that low and then boom, catapults and continues in that direction. So now this is support. And it's the same thing like resistance. So we have this high, price comes back and touches that high again. We also, on this range, this is a resistance because we have this touch, we have this touch, we have this touch. So this is resistance. And so if you can understand support and resistance, then you are one step closer to making money. Because here's the thing. If you know where price is consolidating because we want to bet that one pair will be stronger than the next. So we want to see price consolidating like this. And then once price starts moving, so once we see price break above this level, you can get in and target a 1 to 2, 1 to 3, depending on how much greedy you are. Point being is that we need to see an area of support and resistance first, and then wait for price to break support or resistance before we get in. So basically, I have oversimplified the way that we look at the market. Now, I want us to talk about how exactly I trade and how I look for my setup using the information that I have shown you right now. So this is exactly how I analyze the markets to look for high quality setups that make me money consistently. So step 1 is understanding how markets move. We have talked about support and resistance. So here is the thing. If we have a high, like for example here, if we break out, for example, in this direction, there's a very high probability if we break above the high, if we break above the resistance, we will continue going up. And if we break out to the downside, then we will go in that direction. So how do I use this information to look for my setups? So I use 24-hour periods. So Monday is my landmark, and Monday sets our high and our low, so which is our consolidation. On Tuesday, price could break out and stay outside of that high, which means that there is a very high probability price will continue going in that direction. But Tuesday might also break out and then close back inside of the range. So when I say close, at the end of the day, the last price of Tuesday is actually inside of the high and the low, so which is inside of the consolidation. So if I see that, then I know there is a very high probability that price will continue going down in that direction. So remember, this is a game of probabilities. If it's a breakout, if price breaks out and stays outside, there's a very high probability it will continue in this direction. If it breaks out, but then at the end of the day, the price is inside of the high and the low, or inside of the consolidation, then there's a very high probability the next day price will continue in the direction of the close. If we look at real life example, we have Monday giving us our consolidation. So it's called the opening range. So these lines show us where the day started and where the day ended. So if we look at Monday, Monday gave us this consolidation. Now it does not look like a consolidation, but let's call it consolidation because it's the opening range of the week. And then Tuesday, we see price did break out of that high. So price went above the high of Monday, but once the day closes, so at this line is when the day closes, we see the price, the closing price is inside of the high and the low. So it's inside of that consolidation. So this is a reversal signal for the next day. This is where it closed. So if it closed outside, so if the price, the closing price was outside of the high and the low, or outside of the consolidation, then that meant that price would continue in the direction of the breakout. Now, which means that now we have a new high, but the next day we are looking for an opportunity to sell. And we did get that opportunity later in the New York session, which I will explain what I mean. And then on Wednesday, so we have the consolidation now of Monday and Tuesday, because price will always be expanding the ranges. So we have the high, we have the low. If Wednesday closes inside of the consolidation made on Monday and Tuesday, it means that on Thursday we can sell again. So we see price did break out and we see price stayed inside of the consolidation, which means that the next day there is a very high probability of price selling. And so our goal is to find the reversal point for us to get in as price now is reversing back to the low of the week. That is how I identify my trends. So I am a reversal trader. I have to wait all these days so that I can catch one or two of these high quality setups. Now that we know exactly how I look for these reversals, how do we time ourselves in order for us to get these reversals? So there are 3 sessions that you can come to trade in the market. And for me, I only prefer trading 2 sessions. And in those 2 sessions, I only look at the charts for 2 hours per session. So Asia is between 9 and 11 p.m. This is New York time, by the way. And then London is between 3 and 5 a.m. New York time. And then New York is between 9 and 11 a.m. New York time. So when I come to the screen, I am coming exactly at these times to look for my setup. So in this day we were selling, I come to the screen at 9. So at 9, my process is very simple. I just look at when the day closed, the previous day closed. That is the open of the current day. I look at the open and then I draw the highest and the lowest point price has reached. So this is the lowest, this is the highest point. And then I draw my lows. Remember when I told you if price is going up, then it will always be creating. So we have buyers who are strong, and then we have sellers who are weak. Buyers who are strong, sellers who are weak. Buyers who are strong until we reach a level where there are no more buyers and it's only sellers. So how do I identify that? So what I usually do is I just draw my lows. So for you as a beginner, you can draw these lows. So it will be many lows, but you are looking at where price went lower and then continued going high. And then we have this level here. So if you draw a line and you see it has 2 touches, that is what we call a level. So all you do is just draw another line at that area. And then we see we also have another level here. Because if we draw a line here at this low, price touches it again. And then we have this low here. And then price touches it again. So this one is our level. So once I identify the levels, I just delete the lines that are not levels. So this one where we have just 1 touch, that is not a level. We also delete that one. And then we are left with only levels. So this is our level, this is a level, this is a level. Now, here's the thing. How do we get in? So we don't want to get in as price is consolidating. We want to get in as price is moving. So our goal using the 15-minute time frame is we identify a breakout. So we want to see price coming and breaking below these levels. So it looks like that. So as price is breaking out, so as this candle is breaking out, what we want to do is we get in as it's breaking out. We put our stop loss above that candle and then we target the low. Simple. And then we just let the market do its thing. In conclusion, this is what Forex trading is. If you want to learn more about this, I have a free masterclass. I will link it in the bio. Go check it out. It explains everything more slowly with more examples. And if you got value from today's video, subscribe and I will see you in the next video. Peace out.